clearly it's priced in. I mean, even pre-market, when the S&P futures were higher, the German DAX was barely up, and China's Germany's biggest trading partner. Copper prices were down, bond yields were lower, and only 20 minutes into the opening, the Russell 2000 was negative. So we've been pricing this China deal in, it seems like 20 times already, and I think we finally reached a point where it's more safer to say that it's been fully priced in.
Peter, what do you make of the fact that we had China outperformance, stock market outperformance today, again, as we have done really since the start of February, 13.5% in February for the Shanghai comp to the S&P's 3.5%?
Well, it's also in the context of how badly it's underperformed. I mean, even at this level, the Shanghai composite is 50% below where it was in 2007. You also had the inclusion or the increased weighting in the MSCI change that helped to bring new capital in. So, and the Shanghai composite is very retail oriented. So it deserved a bounce. There's no question about it. Stocks there, many stocks have gotten cheap there. But I think we have to understand the perspective at which it got here.
Wondering, Peter, how you're reading these moves in bonds. I mean, yields are lower today. We saw that back up, though, last week. What do you think that the bond market is teeing off of?
Well, it's very much sending a different message than the stock market. So in early October, when the S&P 500 was at 2,800, the 10-year yield was at 3.25. Now it's at 2.75. The German 10-year Bund yield in early October was about 55 basis points. Now it's barely 15 basis points, and the Japanese 10-year, to use that also as an example, was almost 20 basis points versus 0 today. So it's clear that the global slowdown, I think, which should be obvious to everybody, the bond market doesn't see that reversing quickly on any trade deal, whereas the stock market is obviously optimistic that any trade deal can regenerate growth. I mean, even overnight, we saw Taiwan and South Korea, two great industrial export global trade proxies, had PMIs that fell further below 50. So I think that's what the bond market's teeing off. The stock market, again, trading on hopes that a deal can reverse this slowdown.